Vinay, I remember a conversation that we had some time back, wherein you were amongst the voices which had gotten constructive on select CDMO, right? I'm shifting tracks now because
Sure.
healthcare and pharma has become a very, very buoyant topic and a topic of conversation every single day because the stocks are doing well, right? And a clutch of these CDMO names, CRO names are just doing remarkably well on the bourses and in the results. We spoke to Blue Jet, Loras, etc., all of them sounding very constructive. Are valuations starting to look stretched, Vinay, or is the growth trajectory so long that you can still be invested because eventually valuations will correct themselves?
I didn't address one of the questions your colleague had asked earlier, but one of the three big key themes we think where there is valuations which are attractive and the earnings growth is strong is the Make in India story. With the home bias, that's where the CDMO domestically comes in. And similarly, there would be CDMOs which will be selling their products abroad. So let's just think about it for a couple of minutes. First, when you look at the domestic formulation market, let's say it's growing at 12 to 14%. But currently, what these domestic formulators, the big ones, are doing, they're producing about 60 to 65% of their products, and about 30 to 35% of their products are outsourced. That number of 30 to 35%, let's say 5 to 10 years forward, our analyst Sudarshan believes would probably go to 45-50%. And these CDMOs are much smaller than the domestic formulators. So if you have a growth of 12 to 15% for the formulators, the CDMOs, the high quality, the top five ones are growing at probably 25 to 35 times percent. And if you look at their profit growth, that's a little higher because of the leveraging impact, which means their ROCE is all set to move from about 15 to 20% to 25 to 30%. So, they all go well with people who look at growth at reasonable valuations, much higher earnings growth than the domestic formulators, ready market, doesn't need to spend as much on marketing and advertisement, focused purely on R&D, and they get multiple players who give them contracts to make the same product. So for us, CDMOs, be it domestically or globally, is a key theme in our overall structure.
Okay, so I'm guessing what you're saying, Vinay, quote unquote, or not quote unquote, but implied is that despite valuations looking stretched, it's a pocket that could be worth staying invested in, or selectively stocks could be worth staying invested in.
Absolutely, because the earnings growth would surprise you, which means there is a return on capital employed would surprise you, which means the P you're looking at is not really the P which will finally come up.